In a world where beauty never stands still, understanding what makes a brand shine from within is key. As a consultancy firm, we dive deep into the heart of the companies that shape industries, examining their strengths, strategies, and stories. This is Coty. One of the world's biggest beauty powerhouses started over a century ago. Coty Inc. gets to the forefront of beauty's evolution with its line of fragrances, cosmetics, skincare, and hair care. Headquartered at the heart of New York City, Coty operates in over 130 countries, bringing beauty to millions. With prominent brands like CoverGirl, Max Factor, Rimmel, Philosophy, and Kylie Cosmetics, Coty is redefining beauty with innovation and creativity. From timeless classics to trend-setting products, Coty Incorporated continues to unleash every vision of beauty. Let's know more about the company's beauty story. Coty Incorporated is led by a seasoned executive team, driving the company's global strategy and operations. Peter Harf, Executive Chairman, provides strategic oversight and guides Coty's long-term vision. Sue Nabi, Chief Executive Officer, leads global operations, bringing deep industry experience and a focus on innovation and sustainability. Lauren Mercier, Chief Financial Officer, manages Coty's financial strategy and performance. Kristen Blazewicz, Chief Legal Officer and General Counsel, oversees legal affairs and compliance across the company. Anna Von Bayer, Chief Corporate Affairs Officer, leads corporate communications and public affairs, ensuring alignment with Coty's values and reputation. Coty's mission is clear and forward-looking, emphasizing science-driven innovation with a focus on transformation, sustainability, and digital growth. It remains focused yet flexible and aligns with market trends. However, it lacks a strong emotional hook. The vision statement effectively highlights its commitment to transforming the beauty industry through science, passion, and collaboration. It is future-oriented and focused on innovation and partnerships. However, it lacks flexibility due to the absence of detailed strategic direction. Also, it does not quite make a lasting impression. Coty's core values of fearless kindness is a multifaceted principle that guides the company's actions and culture. This value emphasizes the importance of kindness directed towards oneself, others, and the planet. Now that we have introduced you to Coty, let's take a closer look at the company's business model canvas. This framework will help us understand how Coty operates across 9 key areas to deliver value and sustain growth in the competitive beauty industry. Key partnerships. Coty leverages strategic partnerships to expand its market reach and product offerings. A major alliance is with Kylie Cosmetics, where Coty holds a 51% stake, enabling global distribution through its networks. It also collaborates with manufacturers like Intercos, Cosmax, and Amore Pacific, supporting its annual production capacity. Brand licensing deals with fashion powerhouses such as Gucci, Marc Jacobs, and Calvin Klein strengthen its prestige portfolio. Retail partners like Ulta Beauty and Sephora, along with more than 500 influencer collaborations, help amplify both visibility and revenue. Key activities. Coty's core operations include product design and development, supported by a major R&D budget and a portfolio of 77 brands. Their activities span brand management, global marketing, and supply chain coordination, covering 150 countries with 9 production facilities. Innovation is critical. Coty operates 6 research centers and holds nearly 300 patent applications focused on fragrance, skincare, and cosmetics. Key resources. Coty's key resources include its diverse brand portfolio, from luxury labels like Calvin Klein to consumer favorites like CoverGirl. It also relies heavily on intellectual property, global manufacturing infrastructure, and a skilled workforce of 6,500 employees. Further investments in digital platforms for e-commerce, marketing, and analytics ensure a competitive edge in the beauty tech space. Value propositions. Coty delivers premium and affordable beauty solutions to a wide audience. Their offerings cater to luxury, mass market, and professional beauty segments. Innovation is a constant, with an average of 17.6 new products launched annually. Through personalization, both online and in-product configuration, Coty enhances customer satisfaction across multiple touchpoints. Customer relationships. Coty builds relationships through personalized digital marketing, investing over $42 million in platforms like Instagram and TikTok. Their loyalty program boasts 2.8 million active members, contributing to high repeat purchase rates. Customer feedback plays a vital role, with over 247 responses shaping product development and packaging enhancements. Channels. Coty employs a multi-channel distribution strategy, selling through its direct websites, mobile apps, department stores, and specialty retailers like Blue Mercury. Digital commerce plays a growing role, accounting for over 22% of total revenue, with high conversion from mobile traffic and brand sites. Customer segments. Coty serves a diverse global customer base. Key segments include millennials and Gen Z, accounting for 42% of consumers. Luxury beauty enthusiasts, responsible for 35% of revenue. Mass market buyers and professional makeup artists, each with their own unique spending habits. Their global footprint reaches urban, fashion-conscious consumers, particularly in North America, Europe, and Asia Pacific. Cost structure. Coty's major costs include R&D, marketing and advertising, and over $1.2 billion in manufacturing and supply chain. They also invest in licensing, digital infrastructure, and brand partnerships to maintain global competitiveness. Revenue streams. Coty's revenue flows from multiple sources: fragrance and cosmetic product sales, retail, both online and offline, brand licensing income, international market expansion. This diversified model ensures stable, scalable revenue growth across categories. In summary, Coty Incorporated's business model canvas reveals a strategically diversified beauty powerhouse, balancing innovation, branding, and customer-centric strategies to drive global success. We move on to PESTLE analysis. For political, policies and regulations on international trade is stringent. U.S. manufacturers face intense global competition from countries like China, with low cost as influenced by trade policies, tariffs, and international relations. The industry faces significant challenges on geopolitical tensions, leading to operational and logistical hurdles. The industry similarly grapples with the ripple effects of high inflation and economic uncertainty, weakening consumer purchasing power and limiting spending on non-essentials like cosmetics, and it leads many to seek budget-friendly alternatives or so-called dupes. Currency shifts raise costs and affect profits. Sale festivals like 11/11 spike short-term sales but may boost or strain forecasts and stock planning. Ever grabbed a lipstick because your fave celeb swears by it? Or skipped a brand after a scandal? That's the power of today's culture. Beauty demand now rides on trends, wellness hype, and consumer activism such as the boycott or cancel culture. Even partnerships are risky. From AI that knows your skin tone better than your mirror, to AR filters that let you try lipstick while in pajamas, tech is running the beauty game. E-commerce and AI-powered personalization have redefined how brands connect with consumers, especially after the pandemic. Tech-savvy shoppers now expect immersive, digital-first experiences. Think AR try-ons and smart recommendations. But with innovation comes pressure. Brands must constantly evolve mobile tech, manage tech partners, and guard their IP. Plus, data privacy laws like GDPR demand strict handling of consumer information. Operating globally requires navigating a patchwork of legal frameworks. Compliance with regulations like California's Toxic Free Cosmetics Act, the U.S. Fair Packaging and Labeling Act, and state-level bans on animal testing directly shapes product formulations and labeling. These environmental and legal obligations not only influence product development, but also drive up costs through compliance costs, licensing requirements, and intellectual property disputes. The beauty industry is both the source and victim of water shortages, using a staggering 10.4 million tons of water each year, contributing to the very problem it faces. That's a lot of water, enough to make you rethink that extra face wash. As water scarcity becomes a bigger issue, brands are turning to waterless products, sustainable sourcing, and eco-friendly packaging. It's not just a win for the planet, it's a smart move, but also a challenge since, as mentioned, consumers are increasingly choosing eco-conscious brands.
Coty's revenues showed steady recovery from 2021 to 2024, reflecting positive sales growth, but net income remained highly volatile, briefly turning positive in 2022 and 2023 before dropping sharply in 2024, signaling highly unstable profitability. Total assets declined consistently from 2020, suggesting asset disposals or downsizing, which may limit future growth capacity and operational flexibility. Coty's financials show recovery post-2020 with improving margins and positive operating income by 2022. However, inconsistent net income suggests non-operating expenses affect profitability. Liquidity is a concern, with low current assets limiting short-term obligation coverage. Despite slight growth, Coty's reliance on long-term liabilities poses risks to financial stability. There is a sharp decline in liquidity after 2020. Current ratio and quick ratio fell drastically from 2020 to 2021 and stayed below 1.0 through 2024. Since 2021, Coty hasn't had enough current assets and quick assets to cover current liabilities. Cash ratio is also extremely low throughout, and they have negative working capital since 2021. Coty is likely working under liquidity stress attributed to the pandemic and aggressively managing working capital. Coty implemented a steady deleveraging strategy, reducing its long-term debt capital and debt equity ratios, shifting towards a more balanced, equity-backed capital structure. This is supported by lower net gearing and financial leverage, indicating reduced debt reliance. Interest coverage turned positive and cash flow coverage increased, showing Coty is more solvent and generating sufficient cash to meet obligations. Since 2020, cash flow indicators have improved, but key gaps remain. The cash-to-income ratio stays below 1.0, showing weak profit-to-cash conversion. Dividend payments turned negative, reflecting ongoing free cash flow pressure. Despite debt coverage and repayment capacity, cash generation lags, which signals operational inefficiencies. These are the margins. Now, Coty's profitability has shown a dramatic turnaround from 2020 to 2024. While margins were deeply negative during the 2020 on the pandemic, the company steadily climbed back to profitability by 2023, with net profit margin, ROE, and ROI peaking. Though there was a slight dip in 2024, profitability remained in positive territory, signaling improved cost control, efficient operations, and revenue recovery. Gross margin also strengthened consistently, highlighting Coty's improved pricing power and product mix. Coty's operational efficiency improved, with asset turnover rising from 2020 to 2024, indicating better asset utilization. Receivable turnover strengthened, peaking in 2023 before slightly dipping in 2024, signaling faster collections and improved liquidity. This is supported by a drop in days sales receivables, showing quicker cash conversion cycles. However, inventory turnover was volatile, declining in 2023 before recovering in 2024, implying supply chain or demand adjustments. The investment valuation shows weak fundamentals despite a stable stock price. The price-to-cash flow ratio is inflated due to unstable or negative cash flow, indicating poor cash generation. The price-to-earnings ratio is volatile and mostly irrelevant, reflecting earnings instability. While price-to-sales and price-to-book are more stable, they are gradually declining, suggesting market pricing outweighs true performance. Finally, this is Coty's DuPont equation, breaking down return on equity into profitability, efficiency, and leverage components to reveal what drives its performance.
Now we move on to the value chain analysis, where we look at the step-by-step process that Coty goes through to deliver value to its customers. We begin with the primary activities, starting with what Coty does for their inbound logistics. Coty has cultivated numerous flourishing partnerships with suppliers through its supplier partnership initiatives, one of which is E2 Open Supplier Portal Tool, a software that allows suppliers to automate their MRP management. Coty has also placed an importance on ethical sourcing, with their supply chain VP aiming for 100% recyclable packaging, as well as AI integration into their inventory management. For their operational activities, Coty conducts business in Asia, Europe, North and South America, the Middle East, and Africa, while its headquarters are in New York City. They have recently shifted to more eco-friendly production processes, with 50% of their operation sites being carbon neutral, and a goal of having the rest of their sites be carbon neutral as well. They have also shifted to a more modern operating model, accommodating AI and machine learning functionalities to streamline their production. For outbound logistics, Coty utilizes a global network of retailers, e-commerce platforms, and local distributors to deliver their products to multiple countries through their centralized distribution systems. They also developed an inventory system that is customized to fit the regional preferences of its destination countries. For marketing and sales, Coty emphasizes in their own company site that they drive growth, brand equity, and customer loyalty through digital campaigns, events, partnerships, and in-store executions that span both physical and digital platforms. They are also focusing more on advocacy marketing to reignite their brands by reaching customers on platforms where they, as their CEO stated, discover newness and build connections with Coty's various brands. For services, Coty provides a list of available numbers that customers can contact if they have any queries about the company, including a dedicated consumer service hotline and website for feedback and inquiries. They also have a list of FAQs readily available with answers to each one through their official website. Moving on to the support activities, For their firm infrastructure, Coty Inc. operates with a category-focused, consumer-centric structure divided into Coty Luxury, Consumer Beauty, and Coty Professional Beauty. The executive team, based in London, includes division presidents, functional heads, and CEO Sue Nabi. Key support functions cover global supply chains, legal compliance, innovation, and HR. This framework enhances operational efficiency and positions Coty for leadership in the $500 billion beauty industry while pursuing sustainability goals. For their human resource management, the company operates with multiple functional departments, including sales, marketing, supply chain, research and development, finance, human resources, and others. Recently, they have adapted cross-functional Scrum and SWOT teams to help with long-term forecasting, short-term inventory allocation, and innovation sizing. They have also invested into training their employees to be ready for AI and machine learning integration and functions. For technology development, as discussed earlier, Coty has invested heavily into reinventing its operations and supply chain management by integrating artificial intelligence and machine learning to optimize and streamline its processes. It is also developing ways to utilize AI for consumer preference forecasting, and they recently invested in looking into developments that allow them to be more eco-friendly and carbon neutral in their production processes. For procurement, Coty has also invested into finding sources for more sustainable raw materials for their products, as well as sourcing these materials from a wide variety of international suppliers that they have relationships with through their supplier programs.
Coty Incorporated is rolling out a focused strategy across operations, marketing, finance, and growth. On operations, strengthening its supply chains with AI, targeting 30% plus margins and 50% recycled packaging by 2025. On marketing, expanding luxury brands with TikTok and IG campaigns, aiming for 25% DTC sales by 2026. On finance, reducing debt to $2.8 billion, targeting 18 to 20% EBITDA, and launching a $200 million buyback. On growth, expanding in China, travel retail, and skincare with 30% sales growth in the Middle East.
We move on to the VRIO analysis. Coty Incorporated leverages a range of resources and capabilities to drive its position in the beauty industry. These include a diverse brand portfolio, intellectual property, manufacturing infrastructure, human capital, and digital technology platforms. Each resource plays a critical role in Coty's global reach and competitiveness. However, while valuable, many of these resources are not unique or costly to imitate, positioning Coty in a space of competitive parity rather than providing a distinct market edge. Diverse brand portfolio. Coty owns a mix of prestige and mass-market brands like Gucci Beauty and CoverGirl, allowing it to target a broad range of customers. While this is valuable, it's a common strategy in the industry and not rare or costly to replicate. Intellectual property. Coty's portfolio of over 300 trademarks and 1,000 patents protect its innovations in fragrance and skincare, providing a competitive advantage. However, this is not rare in the industry, as competitors like L'Oreal secure more patents annually. Manufacturing infrastructure. Coty's global manufacturing hubs ensure it can scale production for both mass and prestige products. While valuable for efficiency, its manufacturing capacity is not rare, as other industry players operate larger and more numerous facilities. Human capital. Workforce, including R&D professionals and leadership from top companies, drives innovation and brand strategy. However, this talent is widely available, and other companies also employ large, experienced teams in R&D. Digital technology platforms. Coty invests in AI-driven personalization and AR beauty tools to enhance customer engagement. While valuable for consumer interaction, these technologies are easily replicable and are widely used by competitors like L'Oreal and Estée Lauder. While Coty has the right resources in place, its ability to differentiate itself from competitors is limited, placing it at parity with other beauty giants.
Finally, this is iLoveStrama's company critique for Coty. Coty is navigating several challenges that could impact its future. While cost-cutting measures like closing manufacturing sites might improve short-term results,
It risks operational capacity and supply chain resilience. Sustainability goals are tough to meet, and intense competition in the beauty market requires innovation. Heavy reliance on brand partnerships and technology integration brings risks, and focusing too much on specific regions like China could expose the company to economic instability.